Glad to have you with us today, Pete. My name is Jeffrey Nance. If any of you guys are unaware, I've been with TRADEway now for quite some time. So glad to be with you guys as we kind of look at the year in review, Pete. And when I think about today, I'm like, how incredibly cool is that? For God's timing, that today kind of encapsulates the entire year for us. Today, what the market is doing is like a perfect analogy for what the market has done all year. So I think, Pete, when we get to these end of the year things, it's always kind of cool, so the news shows, they do like, all the stuff that we've forgotten, these events that occurred and the people that have died. And it's pretty cool to remember that. And then you've got your radio stations out there and they're playing the top songs. You're like, wow, that was from this year. Okay. Wow. What month was that? And then January seems like so far away. And cause here we are, Pete, I don't know if you recognize this or not, but we're less than 2 weeks away from Christmas. 2 weeks away. It's like, what? 2 weeks. So for me, it really did feel like November and December kind of flew by. And, and I guess it's good. Gordon says, and now for the top stocks of 2022. Well, Gordon, that would have been probably a good thing to do. I actually don't have that ready, but you're right. That may be something for next year. I can work on that. What were the top performing and I guess we can look at the dead ones too, Pete, and be like, which ones were the worst? So we can do kind of a top performing and a top not performing.
How about the top stocks for 2023? That'd be a good topic too.
Maybe. Little prediction there. So glad to have you guys with us. We've got several things planned here. And so Pete and I are going to drop off video now that you've seen our faces, because we want to cover up your screen so that you would miss out on anything. But just let me give you a broad overview of what we are going to discuss today. So we've hinted a little bit at some of what we're going to cover here. And if I had a word, Pete, to define 2022 from a trader's perspective, I believe that word would be volatility. This year has had so much movement. Now, one of the things that we're going to do during this time together is we're actually going to compare this year to some previous years. And I think in and of itself, you guys are going to be like, wow, this year looks really different. So we're definitely going to take some time to do that. But before we get there, let me kind of come back over here. I just want to show you guys, something, Pete, that I think kind of aligns with what we want to see here in our recap for the year, that there is a massive diagonal resistance line that has stood the test of the entire year. And that line actually started in January. And on Charts by TRADEway, I have a little difficulty, Pete, kind of adjusting the lines here like I want to. And it won't make it just right, but it's about back there is where I want it. But it's pretty incredible when you look back at the totality of this year, because at the end of the year we have a recency bias, and so we have a tendency to kind of think, this is what the year has been like, and then you kind of take a broader view of it and you go, oh wow, no, that was wow, that's different, it's a little okay. And then I think sometimes we can look at it and say, oh, I thought this year was a little wild. Looking back on it, that actually makes a lot of sense. This year was pretty wild. And so when we look at this massive diagonal line, I think it's important, Pete, for us to see really two things that happen with this diagonal line throughout the year. One is that it's pretty obvious that once it hits this line, that line has been a massive resistance line. I mean, massive. There are just so significant drops that occur at this line that it's really impossible to ignore the true significance of this resistance line, which, by the way, held throughout the year. So even when we had this most recent run up, once we got to that price point, it's like, whoa, guys, listen, historically, this has been a massive line, so let's expect it to drop. And then sure enough, it did. So I feel like throughout this year, we've kind of had this mixture here of, something that makes a lot of sense. And then there have been times this year when the market has responded and you go, what? That makes no sense. What are you doing? Why are you going up on that news? And that brings me to my second word for the year. And I would say, Pete, that this year has been defined by volatility. And then right under that, if it were to be one, then it might be like 1A. And I know technically if you have an A, you're supposed to have a B, and I don't. So we'll just have it like 1, and then I go maybe like 2. But it would be news. And a lot of times news kind of just aligns with what the market's doing, so that it ends up just kind of doing whatever the market showed that it was going to do. And then the news is kind of like, oh, cool. Thanks for kind of helping us along there. Not so much this year. News has really been a driving factor. So I figure we would take a little quiz over here in the chat window. In my mind, Pete, there are basically 2 things that have driven the market from a news perspective this year. I might give half credit for a third one, but I think it was fake. All right. So I think there are 2 that are very, very substantial, that are very clear. And then I think there's one that was fake, that they tried to use that for a while, but now we all know that that was a bunch of baloney. So we should have just stuffed it between 2 pieces of bread and called it a sandwich. So I'm leaving that one out, but when you get to, if anybody answers that one, I'll tell you which one the baloney is. Okay. So Gordon, you went one of 3. All right. So 1 of 3, and you actually got my baloney one there. All right. So you got 1 I think is legit, and then you found the baloney. So the war stuff I think was baloney. Like that had very, very little impact on us, and it still continues to move on. It's a horrible thing for all that involved, for all the people that have lost their lives, but for our economy, it was fake news. It was not a driving factor. So anybody writing articles about how the war was impacting our economy was just trying to find something to write about. It really had very, very little impact on us. Now, some might argue maybe it impacted oil and gas there for a little bit, but I think even that was probably a little blown out of proportion. Now, you did get the first one right, FOMC. So certainly the Fed is one that I think we're all aware of. But let me scroll through these because I actually don't see anybody that got the second one. Well, there it is. Ken is not very far below. So interest rates are tied directly to the Fed. So we won't do that one because those are one and the same. Interest rates and FOMC, yeah, those are one and the same. Interest rates, inflation. All right, Pete. Now Pete is our winner. All right, Pete. And you didn't know what the answers were, so congratulations. Yeah. So for me, Pete, I look at this and I go, what were the 2 biggest news items that had a real impact, a clear impact? It was the CPI, right? The Consumer Price Index readings. And then, of course, the Fed's response, though terribly late, the Fed's response to that by raising rates. Yeah, we did have some interesting things, right? We had a new definition of recession, but I actually don't think we have a definition. They just tried to kind of do away with the historical one. So we didn't get a new one as far as I know, Gordon. We just have an open-ended, like, nah, it's not really what we've said historically. It's something different. So yeah, that was kind of a fun little aside note there. Pete, were you going to say something?
Well, yeah. And of course, all of these that we're all mentioning, they're all interrelated. And that's what we keep in mind. And that's really the dance that the market makers have been trying to put on, is that how are all these news items, how are all these topics intertwined, and how are they going to impact what the ultimate issue is, at least from our perspective, is, are stocks going to go up or down? And that really is what the news items, how the big boys are trying to interpret these news items, the interest rates, the inflation, the supply chain, all these factors, all these topics out there. So, and I'll say one more thing, Jeffrey, as far as how to characterize this past year for the market. The big one, obviously, volatility. Yep, you got that one. News, and I think right up there with mine, with me at least, is the unpredictability, which is related to the news, but from a trader perspective, it's that unpredictability that has really been a challenge for us to deal with, really ever since the beginning of this year. So it's again driven by these news reports. We know they're coming, but we have no idea what they're going to say and no idea how the market's going to react to them. So yes, the charts and the technical aspects help, and it's amazing when you look at it from the bigger picture, especially with that resistance line you have, that it holds. And from a broader perspective, from a bigger longer range perspective, there is some predictability. But for a near-term perspective, for us short-term traders, it's just been challenging all year. So that's my 2 cents, Jeffrey. Thank you.
Yeah, and I think one of the things we want to see here, Pete, is that, when it has dropped, we've had an attempted recovery each time. Now, it's a small attempted recovery that eventually fails, and then we see a pretty major drop afterwards. We got a little, I call this a Batman M right here, and so that was kind of the first, like, oh, that's an easy, M there, and then it failed. But then we were constantly getting an attempted recovery, and multiple times throughout this year, we saw the S&P actually break above all the EMAs. So remember, when EMAs are on top, they act as resistance. And back here when we had our Batman EM, the 50-day was acting as resistance, and then eventually the market kind of succumbed to the negative news. Here it was so negative, it was just riding the here, what am I looking at? So a yearly chart. So these are days. Just riding the 5-day EMA down, which is, really, really a significant thing to be willing to sell that often and then that quickly to really ride the 5-day down. Same thing here with our M. And yet, right after that, or not very long after that, you had attempted recovery, a failure. And then we get this breakthrough with these EMAs. So these EMAs are on top. They're acting as weights. They're pushing it down. And yet the S&P found opportunity to drive through it. So now, in order to keep up with this, because you talked about this kind of unpredictable nature, for me, it was just like a willingness to change direction. So this year, if you were to look back at your trading, I would say this year, if you wanted to say, well, how would I assess this year from a personal perspective? What you probably want to do as you kind of review here at the end of the year is to say, well, this year probably taught me more than anything, how quickly am I able to adapt to changing conditions? So right now outside it's storming here where we are. So hopefully everything holds up well with my fiber internet and all that stuff. But it's storming outside. Now, it was raining earlier. We were supposed to have a tornado watch or something earlier today, and then apparently this afternoon it'll be clear outside. And then I think in about like a week from Thursday, Pete, it might snow. So welcome to Texas, right? So it's pretty crazy. So I think, if anything, Pete, that kind of is a synopsis of what this year is like. So I would say if you felt like this year was a struggle for you, yes, maybe it has something to do with unpredictability. But I would say probably more than the unpredictability, it's your ability to change directions quickly, to shift from, oh, this is a bear market, it's got to drop like crazy, and maybe this false ideology that in a bear market everything drops all the time, right? Everything drops all the time. And if that was your mindset for a bear market, then you probably struggle, particularly with all of these recoveries. And as I mentioned, I mean, it was a perpetual state of recovery. And one of the things Pete pointed out is sometimes the reason that it recovered was pretty crazy. Hey, like today, the S&P was up 100 points this morning. 100 points this morning. Why? Well, because inflation was only up 7% from last year. Yeah, guys. All right. That is awesome, right? Everything only costs 7% more than it did this time last year. Let's throw a party. This is awesome. Like, what is going on here? Like, I think that's been part of the issue, Pete, is people have lost their collective minds on what's good news. And I think with this year, people have been so starved for good news that they're like 7%, 7.1 is less than 7.5. Yeah. And I'm looking at it going, it's still 7%. That's not 1. It's not 2. It's not 3. It's 7. It's like double 3. It's like, that's not good still. And then we have the Fed that's like, well, at least it's dropping. And so somehow people are out there thinking, well, the Fed is going to slow down raising rates because it's working. I'm like, who thinks this way? Who looks at something that they're doing and goes, hey, I mean, can you imagine, Pete, being so successful in a football game, just running the football that you're literally picking up a first down every time you run the ball and going, hey, let's just start passing like crazy. I mean, what? Don't outsmart yourself. If running the ball is picking up a first down every time, why don't you just keep running the ball till you get into the end zone? And then the next possession, why don't you see if they've stopped it or not? And if they haven't, then keep doing it. So the Fed is sitting there going, hey, this is still terrible at 7.1%, but it's better than 8, which is better than 7.5. So it's going the right way. So what we're doing is working. So guess what? They're not going to stop raising rates. They're going to continue to raise rates. And yet somehow, historically, right, the market always responds negative to raising rates. And yet people are out here going, well, this is great news. I'm like, no, it's not. It's not good news. So today we saw this very thing. So we sit here and go from a very simplistic perspective. Oh, it's at this massive resistance line. What should it do? Okay. So from that real easy, basic perspective, we go, oh, it's at resistance. It should drop. And yet you wake up this morning, you go, what in the world? The S&P's up 100 points because inflation's only up 7.1%. And you go, that doesn't even make any sense. Why in the world is it even up? That's still bad news, but wow, they're perceiving it as good news. So then it pops up, and now you're like, oh, it popped up. It's up really big. Now, is it going to drop or not? Well, it's at resistance. And so now what we've seen is, well, the market has dropped and is still dropping as we do this webinar. And, by the time this day is over, it may be red. It might actually be red today. But, maybe we'll see. But this resistance line, which is held all year, is still being really, really strong in the face of this, really massive overreaction to what is being perceived as not bad news, when in reality it is bad news. So that's something, Pete, that I think that we can kind of latch on to and just kind of assess, like, how did I respond? So when the market kind of did weird things, how did that impact me? Because one of the things we want to be careful about doing as we reflect on the end of the year and how everything went for us is to say, is this year a normal year? Is it normal, or was this year very different? Because if I make all these assessments of my trading and my results, and then I go, and then I kind of end up with this idea that, man, I did a lot of things poorly this year. And you think, well, I need to make a lot of changes. Okay, so on the one hand, that may be true. You may look at your trading and say, hey, I need to make changes based on what the market does in general. Or you might say, wait, I need to make changes in this type of market. So I don't necessarily want you guys to look at this year and then make assertions about you and what you need to do going into 2023 and beyond, unless that assessment is correct. So if this year as a whole turns out to be abnormal, then do you need to make the same type of adjustments? Or do you say, wait a second, in a normal year, I might have had very different trading results. This was just a really strange and different kind of year. Certainly, we spent the entire year in a bearish overall trajectory, but there were some massive recoveries throughout the year. How did I do with those times of recovery? Did I do well? Was I very hesitant to act? Now, I would strongly encourage everybody to assess that one thing, that one thing, not as a whole, but that one thing. How did I personally do when the market changed directions? I do think, regardless of what we're about to look at next, that answering that question is really important in the grand scheme of things, because it does tell you how likely you are to be able to catch major pivots in the market, whether that's true from a broader perspective, like, hey, this is a bull market turning into a bear, this is a bear market turning into a bull. I think assessing your willingness to see the market changing directions and to respond accordingly is certainly a worthwhile pursuit. In fact, I would encourage everybody to do that. How did, and be honest about it too, how did I respond when the market started to move up, but I thought things were still bearish? Was I caught up in the news? Was I, really hesitant to change my thought process from bearish to bullish? Was there a willingness to get into bullish trades? Did I move in, slowly with a small amount just to see, if it was going to turn? Was I willing to get in, but maybe I hedged? Like, how did I approach the potential changing, the shifting of the market from bearish to bullish? So during all of these recoveries, how did I respond? I think that is a worthwhile avenue, all right? And it's a worthwhile use of your time to really think through that. Like, when the market finally broke through the 50-day, were you still bearish in your sentiment? Because you shouldn't be. So let me express that very directly, as I just did. When the S&P is below all the EMAs and you're bearish, cool. But when the S&P breaks through all these EMAs and you're still bearish, that to me is at some level problematic, because it says that you are now being stubborn and you are ignoring data on the charts. Okay, so you are being stubborn You're ignoring data on the charts. You're placing emphasis on things that don't need to be there, whether that's the news, whether it's your perceived response to the news. And guys, the biggest reason why this is a problem is because you're not following the professionals. That's the biggest issue with this, is that once the professionals turn bullish, if we are still not, that means that we're out there on our own going, hey, I know better than the professionals what they should be doing right now. And the good thing is we don't have to necessarily understand what they're doing or why they're doing it, because thankfully they show us on the chart what they're doing. But to ignore the chart is a serious issue for everybody on this webinar and those that are going to be listening later to ignore. To look at this chart and still go, yeah, I'm still bearish. It's problematic. Now, I get it if you're a little hesitant because you're like, man, at any point news could come out and drive this thing down. But at any point, right, anything could happen. So if we constantly trade because we're concerned about everything that could happen, guys, we're going to be pretty miserable traders. I mean, we just can't live our lives that way, right? So the Bible talks about the man who just sits in his house because he thinks there might be a lion in the street. We can't approach life like that. All right? Is there a possibility that a lion is in the street? I mean, I suppose, but is it likely? No, it's actually very unlikely. So once we see the S&P establish that it's changing directions, then we need to have a willingness to change directions with it and to go from bearish to bullish. And you say, well, Jeffrey, what if I'd have turned bullish here? What would that have looked like? Well, for about 3 weeks, you'd have been in pretty great shape. But if you were still bearish waiting for the, shoe to drop here, you still should get in here and ride it up to the previous high. I mean, look right here, guys. Look at all that resistance right there. So even getting in here, going bullish during that stretch still makes a ton of sense. Now, later on, it hesitates, uses the 10-day, and then eventually makes it up here to this more massive line. But from right here, guys, right here, we got to turn bullish and say, man, the S&P really is breaking through. Where's it going? Well, what's the next resistance area? And when you look back here to the left, Pete, look how strong that area is. So, it makes a lot of sense that once it turns here, that it's going to at least get to there. Now, did we know it was going to get all the way up here? No. But you could look back at some things that were written and say, well, it should get to here at least, 4,200. And of course, it did. Now, once we hit here, now, again, we get the drop. We get the attempted recovery. It fails. We get another drop. Over here, this is very confusing. This whole thing, that area right there, because you break through, now you go bullish and you go, Jeffrey, you just told me to go bullish. I got burned. Once. But it would have worked there. It worked here. Would have worked there. Okay? So if we say, well, how many times after these major drops did the S&P get above the 50-day and continue to climb? One. One, not really. None of those are closes above. So, technically, I guess we could count that, but that's not really a clear candlestick close above. 2, 3, a failure. So 2 and 1 above the 50-day. Yep, short-lived. Above the 50-day, held for quite some time. So what we saw like maybe was that 4 times when that would have worked, 2 times when it didn't. Again, guys, if you looked at it and said, hey, you're going to get 4 right and 2 wrong, does that seem like that you would say, yeah, I'm okay with that? Getting 4 right, getting 2 wrong. That, guys, listen, that would lead to good results most of the time. If you get 4 right and 2 wrong, you have a pretty good average. And that's what would have happened. Now, most of the time this year was bearish. So how does this year look in comparison to others? I tried to do this in charts, but It's weird because when you go out, and I'll show you guys what I'm talking about, you go out here to a 10-year and you go to monthly. I don't know, for whatever reason, it shows July as the end of the year. So it makes trying to figure out what month we're in really tough. I don't know why or what the point of that is. So I'm going to show you on a slightly different chart what about a 10-year period looks like. So let's see if this year, 2022, was a normal year, or whether when we look back at this from a little bit more of a historical perspective, if 2022 was actually kind of strange, like we feel like it was. We looked at it from for the entire year from a daily perspective, but what about from a monthly perspective in a 10-year chart? Well, what does that look like? Well, the first thing that I notice is the size of the movement, Pete. Now, obviously, the S&P has increased substantially as far as amounts since 2015. So we were hovering around 1,500 to 2,000 for several years, and then right around here in 2017, it just blew up, and we went from 2,000 to almost 5,000. The S&P doubled from 2017 until 2021. The S&P doubled now over that 4-year stretch. That's pretty incredible, Pete, especially when you consider this, guys. So the S&P doubled from 2017 to 2021. The S&P doubled. All right, so keep that in mind. S&P doubled in that 4-year stretch, and yet, Pete, in the midst of that, the S&P doubles as a whole. Right, bigger picture. S&P doubles. We went through 2 bear markets. 2 bear markets. So the S&P doubled over a 4-year stretch, and yet we had 2 bear markets. Now, the thing that I would point out here, guys, is that these bear markets were very, very short, very short. In fact, when you look at this, most of these numbers listed here, I mean, they're over in, look at it. So this was our COVID bear market, 2 months long. Okay, 2 months long. Now, we dropped 36.5%. But, 36.5%. Boom. All right. But now, after this 2-month period, look at what the S&P does in 2020. We get on this massive bull market run, which takes us from 2,000 guys to over 4,500. 2,000 to over 45. And that basically year and a half, we went from 2,000 to 4,500. So 2-month bear market, and then a doubling in the S&P. So obviously we see this, just massive, massive, massive increase. I want you guys to kind of take a look at this chart and tell me, how does 2022 look different? And what's really obvious about 2022, especially those of you guys that can work your way through my spider web of lines here. So try to ignore the spider web of lines and just tell me what you see in 2022 that looks massively different than any of the previous years. Okay, keep going. So Patty says the candlesticks are huge. Yeah, I think that's one thing that stands out. That every month except for that one was pretty big, which again I think goes back to how we started this whole thing: volatility. This year, every one of these candlesticks has been pretty massive. So it either is a big candlestick, and it's big. It's just big. It's big. So that's a very great observation there. All right. Gordon says the bear is longer term. Fantastic, Gordon. Yes, that's the other thing that stands out to me is that over this last 11 years, there is nothing that looks like what we just went through. Now, again, have we been through bear markets? Yes, here here, and certainly here. Okay. So we have been through bear markets. We are in a bear market for the year. But what stands out as very different here is the length of this bear market. So the length of the bear market, but also, like Patty pointed out, I mean, even when we look back, look at the size of some of these recoveries. Let's zoom in here just a bit. I mean, look at that recovery for that 1 month alone. And then you got this drop. Look at the size of that drop. But then you've got this recovery and that recovery. Be real interesting to see where December takes us. But yeah, I think that's a great observation. Let's see what other people had to say here.
Well, and Jeffrey, what's interesting to note here is this is the first bear market that we've real bear market that we've seen since 2007, 2008 bear market, and this is more of the typical bear market, which is 18 months plus or minus. But the other thing that is that we normally see in bear markets through history, through the last 50 years or so, is that it is very common to have 2 to 3 month uptrends within a bear market. And I think so we need to learn to expect these rather long, I guess, bullish trends in the bear market. And of course, the skill comes in predicting where are those major pivots going to take place, both pivot to the upside and then pivot to the downside. And gosh, that really is difficult, especially when we're in an environment like we are now, where it's largely news driven. But if we have that expectation that there is going to be 2 to 3 month bear market rallies, but before we see another leg down, I think that will help in being able to help anticipate and certainly trade through these trends. Thanks.
Yeah, Pete. And I think, guys, we if we're just kind of scrolling back here, we kind of look at 2008, and I think all of us remember, 2008. Like, that's a year we remember. Those of us that are in the market, because we're like, whoa, that was a massive bear market in 2008. In fact, the one before that was like 2000, 2001, right? So, when we kind of look at 2008, we go, wow, that was the last time where we saw, like, for the entire year, this kind of moved down. And so as we just kind of scroll back, I'll just kind of see, do we see any other times when it's so clearly what we've seen this year? And again, the answer is no until we get back here to, again, the year I just mentioned, 2001. Okay, which see 2008 we know as the Lehman Brothers crash, everything going on there with the housing market and the all the stuff going on there. So that looks kind of okay. That's all right. That was a pretty massive move down. But again, the S&P split in half during this run, guys. We haven't seen anything close to that. When we look at it from a percentage perspective, the S&P hasn't dropped in half. If so, it would have had to get down to 2,000 something. We're nowhere close to this kind of move. Now, from a candlestick perspective, kind of looks kind of like that. But from the size of the move, from even actual numbers, yeah. But look at this, guys, 1,500 to 750. So the S&P lost 750 points, and it got cut in half. But now we're at 4,000. We lose 700 points, and it's like, we're at 3,250, and it's like, well, we did that. So this looks massive because proportionally it was significantly more. The S&P got cut in half. Same thing happened in 2001, where you're here at 1,500 and you get down to 750. So that 2001 bear market, where again, Pete talked about this. I mean, look at this, guys. Let's go back and kind of see historical things. When we're in a bear market, these are monthly, but look at that's a pretty big month recovery. That's some pretty massive drops, but there's some pretty big recoveries. Now in 2002 here, surprisingly enough, it's just mainly drop until it finally recovers. So I think that's interesting to note a couple of those things. So how does this align historically? Well, it's still kind of mixed. I mean, it does look like some of those pretty major bear markets, but in size, no, it's nowhere close to some of those bear markets. Are there massive candlesticks from one month to the next? Yes. Are the recoveries seemingly, more sporadic, more spaced out than in those past? At least in those, we saw it like go up, but then it dropped and dropped and dropped and dropped, and then maybe it'd go up and drop. But here it's like it goes down, it pulls back up, it drops, it goes back up, it drops, it goes back up, it drops, it drops, it goes back up. Again, the volatility has been a little different. So when you're analyzing this year, what I would say to you is don't overanalyze this year. All right. Yes, take an assessment, but don't overanalyze this year, because even historically, this year has been a little weird. It's been a little weird. When we compare this year to most years, of course it doesn't look like most years. Why? Because what does this chart clearly indicate to us? Most years, the S&P goes up. Most years the S&P goes up. When it drops, there's always hesitation, right? So there's going to be times when it does go up. And again, when we look at future bear markets, I need to know that historically, just because we're in a bear market, it doesn't mean that everything is going down every month. That's just not historically what has happened, and it's not likely to be what's going to happen in present. So I think it's good and it's healthy for a lot of us, because this might be your first bear market where you really tried to trade it, and you probably are looking back going, man, that wasn't exactly what I thought it was going to look like. So it's good to kind of take this year and say, all right, when I'm in a bear market in the future, yes, I know that overall the market is going to drop. Then it doesn't mean that I don't have bullish opportunities throughout that year as well. So we need to be aware of those things, because those will help us in the future when we deal with similar types of market. Yes, we may not have a market that looks like this, but we will have something that at least resembles it in some way. So it's important for us to really assess, what am I doing? And again, how did I respond to this volatility? Was I able to trade through that? Was I able to make sense of it? Should I learn some different strategies that may perhaps help me with volatility? Where I have some upside mobility, but maybe some protection in case it goes down. Like, are there some things that maybe I should be doing? Some different ways I can think through that when I am experiencing volatility. I think those are healthy things. But don't overanalyze this year, because again, it is a fairly unique year in many respects from what we've seen historically, even in elongated bear markets like we saw in 2001, and 2008. So even during those times, this still looks similar, but very different. Again, in magnitude, in percentage drop, but also in just the movement in general. When it did what it did, it still is a little different. Okay, so now the next thing I want us to discuss is, how do we finish strong? How should I look at this year? I told you guys we might be negative by the time today is over. I actually think that's good. And again, it goes back to something simple. It's just like, wow, that line is really strong. Kaysen mentioned earlier that tomorrow might be very interesting, right? Because we just got the CPI news today. We saw a massive overreaction, but then we saw that, hey, yeah, you guys are right. It was a massive overreaction. Now we're getting a pretty deep sell-off. I don't even know. I'm just going to check live. Yeah, guys, listen, we're up barely single digits now. This thing easily could be red by the time we finish this session. So definitely seeing a strong response. Now, how do we finish strong? I mean, part of you guys are probably sitting out there going, dude, I wish I'd have jumped into a put this morning. This thing's down 90 points from its high. Whoa, that would have been good. Yes. Yeah, absolutely. It would have been good. Right. But again, I think this is where you kind of have to really think through what's happening. So on the one hand, was this really shocking news, right? It was really shocking news. What? This kind of response to a 7% interest rate? Like, so I'm not going to go get in puts. This thing is exploding up. Well, it is at this really, 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 really strong resistance line. And then you kind of look back and go, wow, so which one held the day? Well, this really, 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 really strong resistance line. So now you kind of see the debate here between, well, do I do simple things or do I make this hard? Because if you just said, well, what's the really simple thing? The S&P is at a historic resistance line. What should I do with the S&P at a historic resistance line? I should probably go bearish. Right? I mean, that would make a lot of sense for me to go bearish. But if you didn't, then again, now why? What was the thought behind that? Because I think finding the answer to that is really important. Because it may be that in the midst of all the information that you have available to you, that somehow you're making some stuff harder than it needs to be. It's like asking, if the S&P is at support, is it a good time to buy? And the answer should always be the same. Yes. The S&P is at resistance. Is it a good time to go bearish? The answer should almost always be the same. Yes. I mean, unless it's just blowing through resistance, in which case then we would say no. But that's very different than if it hits resistance and it starts a descent, we would say, well, of course, this would make sense. And a lot of times what we'll do is we'll look back and go, wow, that thing was at resistance. Look at how it fell. That's amazing. We'll forget, what caused that. We'll just look at that and be like, look at this massive candlestick down and the response, to this really, really strong resistance line. So how can I finish strong this year? I do think the way that we finish, it is from a mental perspective, but also, just from an account perspective, it's good to finish strong. It is good to finish strong because it sets up, in some ways, expectations of what you're capable of doing moving forward. So we're going to close this session with really doing two things. How can I finish strong this year? And how can I set worthwhile goals for next year? So, perhaps everybody on here has a desire to make tens of thousands of dollars every month, right? I mean, I think that's a safe assumption to assume that if given the opportunity, I think everybody here would be like, yes, I would be good with that. I think that sounds pretty terrific, Jeffrey. Well, then what I would say in response to that is, what is your rationale for thinking that you'll make tens of thousands a month if you're unable to make $100 a month consistently? All right, consistently. If you can't make $100 a month consistently, what makes you think that you have what it takes to make tens of thousands of dollars every month? So what I would encourage you guys to do is to say, all right, let me take the challenge then, Jeffrey. I'm going to try to go make $100 a month. You go, that's not much. Some of you guys are definitely out there going, well, that's not much. That's barely going to do anything for me. I would say it's doing a lot more for you than you realize. In fact, let's just do this. Let's just say that we are establishing habits and developing skill sets that allow us for 2023 to make $100 a month. And we're just going to go real basic here, guys, but I'm going to show you the potential of what this could look like. So if we have the potential to make $100 a month and we do that consistently, then basically now we go into next year, 2024, and we say, all right, let me double that. Let's go for $200 a month. Now, again, all of us at any point could get into a trade and make $200 a month, right? I mean, that's that's feasible, that you could go get into a trade and make $200 relatively easily and quickly. Okay. But I just want you to focus on what we're saying here. Right. So I make $200 a month consistently. Then we double that to 400, 800, 1,600, 3,200, 6,400, 12,800. And then by the time we get to year 9 and we're headed into 2031, we have this kind of ideal or goal in mind that we're going to be making $20,000 a week here with our trading business. Not a week, per month, $20,000 a month in our trading business. Now, some of you guys might say, well, Jeffrey, I have a desire to make more than that. Cool. What I would say to you is whether your goal is to make $50,000 a month or more, or whatever your goal is, maybe it's $100,000, I don't know, and your goals may change over time. But in order to get there, understand that this is a journey. And, you're not going to get there by your account decreasing. So why not really try to focus in on my account increasing and just doing it on a consistent basis? And what I think you guys might see is that if you'll just focus on making, say, $100 a month, you may get to a point where you're like, wow, I'm actually making $200 a month trying to get to 100. And so then you might say, well, you know what, now I'm really good at stopping out when trades don't work. I'm really good at kind of, discerning what types of trades I should be in, the setups I'm looking for, the strategies that work for me to achieve my goals. I'm finding it's kind of easy to make $400 a month. And then you say, well, how about I go for, 5, 6, 7, 8, and you may just kind of start to see this thing. And then sometimes it happens where you just get on this trajectory and it really starts to snowball in a good way, and you're just kind of like surprised with the amount that you're bringing in just because of the habits that you've established, types of trades that you're doing, and the results that you're getting because you are doing things consistently that have the potential to produce good results. All right. So what I would say to all of you guys when it comes to goals is twofold. One, make sure your goals are realistic. Okay. If you've got $1,000 in your account, could you make $10,000 a month? I suppose. Is that a realistic goal? It is not. But $100 a month is. $100 a month. That's kind of reasonable. So let's start there. All right, let's start there and see if we can do that on a regular basis. You say, well, Jeffrey, I've got $1 million in my account. I don't really want to make $100 a month. Well, you really don't want to lose $100,000 a month either. So I still think that there is a great value in just doing what I call, proportional trading. Proportional trading. Just see if you can do it. See if you can make 100. And can you do it consistently, month after month after month? And it's so great, fantastic. Let's do it. And let's raise that up to a reasonable amount. What are you capable of doing? Set a goal. And the next thing I would say, guys, is goals are meant to be achieved, but goals are meant to be celebrated. You can see that even in what I presented to you, there's almost this thought that once you've hit your goal, it's like, all right, now that's not good enough. All right, go for the next one. And again, I agree. I think that we should push ourselves, that once you reach a goal, you should celebrate, but you should also try to go higher. I think that's good. I think that's positive, but I also don't want you guys to miss out on celebrating reaching your goals. What I would encourage you to do is to say, you know what, if it's just about making money, that feels like a job. Okay? If it's just about making money, that can turn into something that feels just like a job. So I would encourage you, as you make goals, to have goals that are not just simply money related. Have a goal that once I make X amount of dollars, I'm going to go do what with it? Am I going to take $100 and then just go stand in line and pay for people's groceries? Am I going to, buy food for people in line? Am I going to, go give more to an offering? Am I going to go support an organization? Am I just going to be a blessing to somebody by, giving them a massive tip? What am I going to do that's going to excite me about reaching my goal? Am I going to go on a vacation? Am I going to set aside money for a big vacation? Something needs to drive you and motivate you and help you to celebrate beyond just making this about making money. Yes, it's about making money, but what are we doing with the money? How are we planning on being a blessing to our family and to other people? That needs to be a driving factor. That's going to motivate you. Money may motivate you for a time, but if that's all we have, then again, it feels more like a job, and it needs to feel more like a ministry. Like, what am I doing with this? How can I really use this to bless others? And when we're thinking that way, now we're going to be motivated, right? And I think it changes the way that you look at this whole thing too. And the last thing I would say here in regards to goals is to make sure that it means something to you. Okay? It's got to mean something to you. So when you reach this goal, don't just go, all right, that's not a big deal. It is a big deal, okay? And you ought to be proud of reaching that goal. You ought to be excited about that goal, and it's worth celebrating. So go out to eat, go on a date, go do something and celebrate. And if some of you guys are, you have spouses and they're not involved, at least get them on board with this. Say, hey, when I reach my financial goals, we're going to go do this. I suspect that if you have a spouse that's a little bit unsupportive of your venture, that when you include them and you say, hey, every time I reach my goal, I'm going to do this with you or for you, that you may have a spouse that starts to become a lot more supportive of you in this business. And by the way, guys, you need support. You need support. If you're not involved in the community side, make sure you do get involved, because there are going to be times when this gets kind of lonesome and you need accountability. And so go find those things. Go find accountability, but then find support. Make sure you have that. Because, most people that reach their goals do so because they have certain things in place, like accountability and support. So I'm going to end with that, Pete, because as we think about ending this year and moving into next year, those are things I really want everybody to be honest about as you kind of reflect on this year. Do I have support? Do I have accountability? And if not, how do I find it? How do I get it? Who can serve that role for me? How can I hold myself accountable? What does that look like? And then, what am I capable of? To start to ponder that a little bit, at the end of this year. So finish strong, ponder this. Yes, assess the year. Think about what you did. Think about what you could have done differently. React, but don't overreact. And then realize, yes, this year has had some moments where it's done some very discernible things. Yes, it's been bearish for most of the year. How can I take this information and process it to say, all right, how am I going to use this in the future? Guys, the whole thing about patterns is that we use past behavior to predict future potential performance. So if we say, all right, how can I assess this year? How do we use this as a model and say, well, when I am in a situation like this somewhere down the road, here's what I need to keep in mind about how I'm going to trade that and how it may look differently than I traded it in 2022. Guys, I look forward to being with you. This is, kind of our last full week here for TRADEway. We still got stuff ongoing. We got people filling in and doing different things, but we get a little break here for a lot of us. And, I really want you guys to finish strong, but I also want you guys to, make sure you're spending time with your family. It's okay to leave the market alone and come back to it. So if you get a chance, finish strong, great. Get ready for next year, and then we'll get to do this all again. I think I'm going to turn this into a regular thing and kind of do a year in review towards the end of December each time, and kind of reflect on that and do some different stuff with it. So appreciate you guys being with us really for the whole time, not just today, but for the whole time. I know that we got people on here that are involved in all kinds of different ways, some of them just a little bit, and then some of you guys are, you're diving all the way in. So appreciate you, and just, continue to ponder what you can do to improve. I think that's important, but also learn to celebrate. All right, Pete, you have anything you want to close us with today?
Well, Jeffrey, all your comments there, spot on. It's been a challenging year. It's absolutely great, essential to look back and assess how you did, how you can improve, establish those goals, and make them achievable. And I think, Jeffrey, how much you want to make, what do you want to do with that? Excellent. The other piece that I'd like to add is, how do you want to make those monies? Specifically, the strategies that you use. Strategies are tools, and if you've been with us for a while, you recognize that Jeffrey really likes debit spreads. He's awesome at debit spreads. Ross is great at credit spreads. He talks about those a lot. And then Jared and Ben Russell, they're in all kinds of intricate trades, different strategies or whatever. Part of learning to trade, part of this journey is figuring out what strategy or strategies work best for you. Okay, we teach dozens of different strategies. Those are all different tools, but it's an extremely rare, very rare trader that can be an expert or even competent at all of these strategies we teach. So part of what makes trading fun, what makes it successful, is for you to discover what strategy or limited number of strategies work best for you. And then you continue to hone that, customize them, that strategy for what works best for you, and press on from there. And yes, you can add to that, but initially you need to figure out what works best for you, your circumstances, your risk tolerance, and then learn to get good at that single strategy or that 2 or 3 strategies. And again, over time, that may increase as you have more time and you gain experience, you gain wisdom. But initially, just focus on trying to figure out what works best for you. Thanks, Jeffrey.
Yeah, very good. All right, guys. Well, you guys have a very Merry Christmas. In the midst of giving gifts, let us never forget the reason that we celebrate is because Jesus, right? He is the gift that changed the entire world. History forever was changed because of the gift of his life, and certainly what is to come with the death and resurrection. So celebrate Christmas, enjoy giving, and of course, we're all going to enjoy the receiving of gifts, but hope you guys really enjoy the giving and the remembering of why this season really does matter for us, and just taking advantage of that. So go out there, enjoy the cool air if you have it, enjoy spending time with family. Guys, make the most of this. I know for some of you, your family situations are really different. We had a message this past Sunday, Pete, and the question that our church is pondering this Christmas season is, how is Jesus' coming supposed to impact us as believers. And one of the things that we talked about is Jesus coming as the Prince of Peace. And what is that supposed to do for us? How are we supposed to be more peaceful? And one of the things that they talked about is stop being so easily offended. Don't be so easily offended. Most of the time we're offended because we have a very high view of ourselves, and other people don't think and act and do as we think they should. So we get offended. And that's just not the life that Jesus lived. And so if we're going to mimic him and look more like him, then that's an area that we need to think about is how can I be less offended? Now, stand up for what needs to be, defended. But there are a lot of things, guys, when we just need to let it go. Just listen to Elsa, right, and let it go. And again, there are going to be some things that pop up, probably some family situations where you could say something or you could just let it go, right? And that's okay to do. If we're secure in who we are in Christ, then we don't have to win every argument. We don't have to get into every argument. We can be satisfied in who we are with him. And again, I'm not advocating that we not stand up for good and right and truth. I'm not saying that at all. What I'm saying is there are certain things that matter, be able to discern what those are, and then things that don't, let's just try to be better at letting them go. All right? So, guys, have a Merry Christmas, and we look forward to, being with you here for the rest of this week. And then, we'll still be doing some stuff. Some of us will. Some people are filling in. But Merry Christmas to everybody, and we'll see you guys next time.